Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The US and Iran make progress in nuclear talks in Geneva, with Tehran officials scheduled to return with a proposal in 2 weeks. Japan is to invest $36 billion in U.S. oil, gas, and critical minerals projects, the first tranche of its $550 billion commitment as part of its trade deal. Plus, as India's week-long artificial intelligence summit continues, global tech majors commit billions in AI investments. Well, it's just gone 9 a.m. across the Emirates. I'm Joanna Bersachi in Dubai. Thin liquidity trading. Once again, Lunar New Year continues for many of these Asian indices, but we did have the return of U.S. cash markets yesterday. Not so quite triumphant, barely green by the end of the day for these Wall Street indices. But you can see this morning inching towards positive as well, up 0.2%. In a moment, I'm just going to talk you through the rotation that's going on underneath the surface, because obviously we have seen a bit of a tech rout last week. Nasdaq down 2% throughout the course of the week. Asia Pacific, as I mentioned, most of these indices still closed. The Chinese, Hong Kong, Singapore, Japan is still open, and that index is up about 1%. The Nikkei rebounding from yesterday's losses. And also New Zealand in focus today. The RBNZ did not change its interest rates, and so on the back of that, you are seeing a bit of a decline in the currency and yields back up a little bit. So that is the focus for the New Zealand currency, the Kiwi, alongside yields over there. And then Brent also in focus today. We're actually gaining a little bit of ground, up 0.4%, despite, you could say, more positive or constructive news coming out of those Iran-US discussions. We'll talk about that in just a moment. And then 10-year yields, take a look at this. I just wanted to mark this. Look how low we're trading now. We're almost through 4%. We've quietly treaded lower and lower and lower in yields over the last couple of weeks. And not just that, one of the big consensus trades is having the steepener on in the U.S. And what's happened in the last week or so is the curve has started to flatten again. So keep an eye out on that paradigm and what's going on with the shape of the U.S. yield curve. Certainly hawkish language coming out of the FOMC is not helping anyone in those steepeners. 10-year yields getting very close to 4% once again. Okay, I did mention that we're going to talk about rotation in the S&P. So take a look at this. This was put forward by our colleague in the U.S., and it just tells you month-to-date performance, where the main outperformers in the S&P have come from. And you'll see it's mainly real estate, financials, but on the flip side, what you're getting is, well, this is the one-day return, but actually over the course of the month, what you're seeing is an underperformance in communications, in software, no surprise there, and some of the tech names. So they're underneath the surface, what you've seen is a rotation into energy and materials versus some of those technology stocks. All right, let's go back to geopolitics now. The U.S. and Iran have made progress in nuclear talks in Geneva, with Tehran's negotiators scheduled to return with a new proposal in 2 weeks. Iran says it has reached what it has described as a general agreement with the U.S. on the terms of a potential nuclear deal. The agreement would lift sanctions on Tehran and ease the risk of a broader war in the Middle East. At least that's what they're saying. Joining me now is Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia. So the exact language that the Iranian side has said is, we were able to reach a general agreement on a set of guiding principles. Do we know what those principles are, Stuart?
No, but they have 2 weeks. So the time frame seems to be 2 weeks to come up with some draft proposals from either side, then they negotiate the text, and then we take it forward from there. But quite what's going to be in there, you would assume that the US will have nuclear file, they'll have ballistic missiles, they'll have the proxies. You'll assume that the Iranians will only want to talk about nuclear. And that in itself is quite a complex topic. So, you know, that's positive. But we're a long way off an agreement.
But at the same time, I thought it was interesting that the Iranian delegation said, this is per a foreign ministry spokesperson, they're ready to stay longer to finalize any agreement, whether it will take several days or whether it will take a month. Is this an indication that perhaps the pressure campaign that the Trump administration is applying is actually paying off?
I mean, really hard to tell, because it's quite hard to see what exactly the Iranians are prepared to negotiate on. What are they prepared to concede on? They're certainly not going to do capitulation, because that in effect would mean the end of the current regime in Iran. So there are some red lines there they can't cross, or they feel they can't cross, or it becomes an existential issue. Now, is that enough to satisfy the US? Can they, for instance, dangle some economic measures as well? Could they offer deals in energy, mining, aircraft? Potentially. You know, you've seen that in other theatres where that's been quite a successful strategy. And economically, Iran does have enormous potential, even if today, economically, it's in very, very dire straits.
Stuart, is there a feeling that perhaps there's only a limited amount of time or window for a deal to actually be reached, given the buildup of military assets in the region that we've been talking about, Trump's armada? Obviously, now it's the beginning of Ramadan. So I just wonder whether perhaps over the next month or two, this is going to be the window whereby the two sides will be incentivized to get a deal over the line. And if not, then, of course, there's that big question still of military action out of the U.S.
Yeah, just think about the logistics. So you've got a second strike carrier group coming in from the Caribbean. That's going to take 2 to 3 weeks to get here. Once that's in place, you've also going to have the air defences. We know there's Patriots and THAADs and other systems coming into the region, although quite where they're going, we assume U.S. military bases, but potentially around some of the oil fields as well. That's going to take several weeks. Once we're in that position, that gets us maybe into March. You know, will they be strategically ready at that stage, given that they're going to be very constrained in using territorial-based weapon systems? So they're going to have to do it mostly at sea. That's going to require a different order in terms of the amount of equipment you need. But yeah, that is probably the right sort of time frame.
Stuart, thank you so much. Stuart Livingston-Wallace, our executive editor for MENA and Russia. Well, speaking of Russia, Russia-Ukraine discussions are also set to continue today in Geneva. President Volodymyr Zelensky says he's tasked his negotiators with discussing the future of its nuclear power plant during peace talks. For more, we're now joined by Bloomberg's Greg Sullivan. It's with two parallel discussions taking place at the same time. It's sort of, very busy for Steve Witkoff. But what did we get out of the Ukraine-Russia negotiations, if anything?
Well, not much, to be honest. Neither side ended up briefing reporters after the discussions yesterday, but we did hear from U.S. envoy Steve Witkoff that the dialogue was constructive, basically. Still, on the major outstanding issues, and specifically Moscow's territorial demands for land that it does not control in Ukraine's east, neither side really seems to be backing off. Moscow has stuck to maximalist demands, and yesterday we heard from Ukrainian President Volodymyr Zelensky that Ukrainians just simply wouldn't go for any deal where they ceded land. So while they talk about things like ceasefire parameters, should a ceasefire eventually come about, on this big issue of territory, it doesn't seem like either side has budged much.
And interesting that President Zelensky has actually brought up the topic of the power plant as well. Why is that a contentious issue?
Absolutely. Well, we know that this has been a sticking point and one of the outstanding issues. Russia's forces seized the power plant early in the war, early in the February 2022 invasion. It's Europe's biggest power plant, or nuclear power plant, and Ukraine is heavily reliant upon nuclear energy for its electricity generation. So this was a huge loss for them. We also know that there are safety concerns around the management of a nuclear power plant, especially in a battlefield, and that has to be on Zelensky's mind. But ultimately, given the fragility of Ukraine's power generation currently with the strikes happening, this is a big loss for them, and obviously this is on the agenda for Ukrainian President Volodymyr Zelensky.
Interesting that he's brought it up as well. Greg Sullivan, thank you so much for the overview there. Well, I'm going to bring you some breaking news that has just crossed in the last couple of minutes. This is per the Financial Times. The FT are reporting this. Christine Lagarde to leave the ECB before the end of her 8-year term. There are no more details as to exactly when she will be leaving, but also bear in mind that potentially, and this is just looking at the next couple of 12 months, the year ahead, you do have the French presidential elections taking place in April of next year. So could be coincidental that she may want to leave her term before it. It's technically up in October of 2027. So her term was supposed to go until October 2027. The FT are reporting today that she will likely leave before the end of the 8-year term. And Euro not seeing a whole bunch of action here, but modest loss after this report on the future of Christine Lagarde, who is the current ECB president. And there has been rampant speculation as of late that she may be looking to leave her post early. And as I just mentioned, there are the French presidential elections to watch out for in 2027, possibly ahead of a potential post in the next government. We don't know at this point, but what we do know is that this FT report has just hit. Elsewhere, Peru's President José Cheveley has been ousted by Congress after 4 months in office. His successor will be the 9th president to govern Peru since 2016. And Congress is expected to elect new leadership with 4 lawmakers vying to replace Cheveley. Now, lawmakers are accusing Cheveley of failing to declare meetings with Chinese businessmen and for allegedly hiring unqualified young women to work with him. And still ahead, the Bank of America weighs in on the outlook for Asia's tech sector as AI worries linger on Wall Street. But up next, Japan plans to invest up to $36 billion in U.S. oil, gas, and critical mineral projects. More details coming up. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Japan plans to invest $36 billion in U.S. oil, gas, and critical mineral projects. It's the first part of a $550 billion commitment under the trade agreement stuck with President Trump. Let's bring in our Washington Deputy Bureau Chief, Laura Davison, who happened to be in Hong Kong this week. So break it down for us, this $35 billion commitment from Japan, going some ways towards that ultimate $500 billion commitment. What do we know about what they're going to be investing in?
Yeah, so this is essentially a down payment on this broader $555 billion fund. But the first projects here are really focused on energy and artificial intelligence. So the biggest of these 3 projects is a natural gas facility in Ohio. This would be a massive facility once up and running and producing energy at full capacity. It would be roughly 9 nuclear reactors. It could power more than 7 million U.S. homes. There are some questions just about the size and scope of this project, just because it would be the biggest energy project of its kind. There are also 2 other projects. One is a crude export facility in the Gulf of Mexico off the Texas coast, as well as a project that would produce synthetic diamonds. Those are used in the manufacturing of semiconductors, energy, and automobiles as well. So this is sort of this first tranche of projects that Howard Lutnick, the U.S. Commerce Secretary, and the Japanese Trade Minister have been working out ahead of this visit. Japanese Prime Minister Takaichi is headed to the White House to meet with Trump in just about a month, where this deal will be discussed and more investments to come.
Yeah, and no doubt the Prime Minister is riding high of her recent election victory. But, it's interesting to draw, say, a parallel between Japan and South Korea, their respective approaches to these trade deals with the U.S. Because on one hand, there are investment commitments, but then there are also the question of tariffs. And I just wonder to what extent the 2 go hand in hand, that now because Japan have actually pledged the sum, they can expect lower tariffs and for that to stay in place so long as they follow through on those commitments.
Yes, the White House is very much viewing these investment deals and these tariff reductions as hand in hand. South Korea learned, the hard way that if you slow walk some of these investments, Trump will threaten to pull back some of those tariff reductions that were previously reached. Japan was able to learn this, watching their South Korean counterparts go through these negotiations. They were much quicker getting some of these deals announced. The question, though, is how long will it take, that now that there are announcements of these projects to actually getting things off the ground? There's a provision in this U.S.-Japan trade pact that says these investments, the money needs to start flowing within 45 days. That's a very short amount of time, particularly given that there are not a lot of specifics on exactly how these deals will be financed. We don't know if this is money coming, direct investment from these companies, or will it be in the form of loans or loan guarantees from the Japanese government. So there's a lot here, still to be worked out. And, even just in some of the fact sheets and how the U.S. and Japan were describing some of these projects, there were some discrepancies. So it's clear that the 2 sides may not be exactly 100% on the same page.
Bloomberg Washington Deputy Bureau Chief Laura Davison, thank you so much for bringing us the context of that Japan-U.S. investment. Now, Japanese stocks are in focus after that announcement of U.S. investment projects lifted market sentiment. The news was a tailwind for energy-related firms, which were amongst the biggest contributors to the Topix's rise, one of the few indices that's open in Asian markets, up 0.6%. But to broaden out the discussion, joining us now is Lars Naeckter, head of Asia-Pacific Equity Derivatives Research at Bank of America. So I actually want to start with a piece that you and the team put together about lessons from 2025. And the title is Big Tech Leaps Lead to Big Asset Bubbles. So this, I think, is the overarching question as we go into 2026. Are we in a tech asset bubble? Do you see the signs that we are?
There are certainly some signs, but I think the simple answer to that is we're not yet there in terms of being very alarmed. So we've studied lots and lots of historical asset bubbles, and we look at macro through the lens of volatility. And within volatility, you can kind of capture human psychology. So even though we studied, asset bubbles going back 200 years, there are some signs that come across in every bubble pretty much. And we haven't really seen those yet. So it's more like we are sitting in, if you use the 90s as an analog, we're sort of more looking like 97, 98 compared to 99, 2000.
So the early innings.
Yeah, but look, there are pockets of, alarming things, if you like. We have, in fact, formalized this into what we call a bubble risk indicator.
Yeah.
So in certain assets, they are up in these sort of high territories. But the core of the AI sphere, if you like, globally, is not yet there.
Well, I mean, the other thing is that most of these companies are still actually quite profitable. I know that there are baskets of non-profitable tech, which sort of have been a lot more speculative, but the big hyperscalers are still putting in the returns. Their growth profile is there, the numbers are there, the EPS year-on-year growth is also there as well. So perhaps that is the big distinction versus, if you're thinking about .com.
It is, yeah. And I guess the next question you have to ask yourself is, how stable is the E in that equation, the earnings, right?
Right.
But, that's probably fair enough.
Yeah. So then if you were an investor, you have two choices, right? You can chase this rally and close your eyes and sort of hang on and hope that the good times are going to keep going. Yeah. Or you cannot participate in the rally and underperform the market. So what do you do?
Yeah, that's the conundrum, right? I mean, if you did the second option back in 97, 98, you lost out on two amazing years, right? The Nasdaq was up almost 100% in 98 and 100% in 99. So that's why we look at options, right? That sort of allows you to more safely participate in a rally. So you know that if you buy a call spread, for example, you have a defined max loss, but you also have the upside, right? The challenge is that sometimes it can be pricey, but that's kind of my team's job, right, to find efficient ways to do exactly that.
Are there any affordable hedges to the downside at this point? Say if you're positioned long with a bias towards long, what sort of downside protection can you find in these markets that's good value?
Yeah, it is admittedly a bit hard, but you can go a bit, as we call light exotic in my world, and you can sort of come up with things that are sort of taking advantage of the elevated volatility to cheapen your puts.
Yeah.
But it gets a bit too complicated, perhaps. But, every once in a while, something comes up. And we have, the VIX is trading around 20 now, but every once in a while, we'll probably come down to 15, 16 again, in which case you can sort of start looking at things to buy volatility.
Okay, so we're talking about equities here. What about the price action that you've seen in metals? A whole bunch of volatility there. Underlying volatility is a lot higher than what we're seeing in the VIX.
Yeah.
A lot of speculative buying. Do you see signs of a bubble in that space?
We have seen very much bubble-like price action.
Yeah.
We're not saying it is a bubble, but look, over the last 3 or 4 weeks, we have specifically been writing about silver and gold because towards the end of January, we had gold hitting very high levels on the bubble risk indicator, which didn't tell us, to get out, but at least, watch out and sort of look more to options compared to just implementing that Delta One structures.
Yeah, and is there appetite to put on any of those trades or, retail buying? Because the thing is, so much of the most recent wave of flows has come through from ETF and from retail. I just wonder whether they're mainly thinking about participating in the upside as opposed to hedging the downside.
Yeah, well, the option volumes in ETFs on gold and silver have been very high compared to the underlying open interest. So there's certainly interest in it. And, we've been looking at things like simple call spreads on gold, for example.
Yeah. Okay, final question I want to ask you, because I thought this was quite interesting. You still like having exposure to Asian equities, to the HSCI, and also one of the catalysts for that, you believe, is the stronger renminbi, which is going to continue to drive great gains over there.
Yeah, I think this is quite an important shift that Beijing is allowing the renminbi to strengthen. And, simplistically looking at Hong Kong and China, you could argue that a lot of the earnings in Hong Kong, which are obviously in Hong Kong dollars, are earned in renminbi, so a stronger renminbi automatically inflates the returns or earnings in Hong Kong. There are other good things as well, but we think this could be a massive shift that the renminbi is strengthening.
Yeah. Lars, thank you so much for coming on. Really good
Pleasure.
to chat to you. All things bubbles around the world. Lars Naeckter, head of Asia Pacific Equity Research, Derivatives Research at Bank of America. Well, coming up, Abu Dhabi's MGX fund emerges as one of the world's most consequential backers of AI technology, with stakes in OpenAI and Anthropic. More details ahead. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Now for a look at some of the other stories we're following. Meta has agreed to deploy millions of NVIDIA processors over the next few years. The rollout will include products based on NVIDIA's current Blackwell generation and the forthcoming Vera Rubin AI accelerators. Meta also says it plans to rely on NVIDIA's Grace CPUs for the first time. The pact reaffirms Meta's loyalty to NVIDIA at a time when the AI landscape is shifting. Anthropic has released a new AI model that it says is better at using people's computers in increasingly complex ways. Claude Sonnet 4.6 can perform multi-step actions on a computer, such as filling out web forms and coordinating information across several browser tabs. Anthropic also says the model is more resilient against security threats. And Warner Brothers Discovery has agreed to reopen buyout negotiations with Paramount Skydance after Paramount sweetened some terms of its bid. Paramount will be allowed to make a best and final offer after indicating it would raise its bid by at least $1 per share to $31. Warner Brothers agreed in December to sell most of its business to Netflix for $27.75 a share. And a look at how markets are faring before we head into the break. It is a sea of green out there. S&P futures up 0.2%, the Nasdaq up 0.3%, European markets up about a third too. Coming up, metals edging higher today and thin holiday trading. We're going to speak to George Cheveley, Natural Resources Portfolio Manager at 91. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. The U.S. and Iran make progress in nuclear talks in Geneva, with Tehran officials scheduled to return with a proposal in 2 weeks. Japan is to invest $36 billion in U.S. oil, gas, and critical minerals projects, the first tranche of its $550 billion commitment as part of its trade deal. Plus, as India's week-long artificial intelligence summit continues, global tech majors commit billions in AI investments. It's just gone 9:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Well, U.S. markets back online yesterday after President's Day, and what we saw was a slight uptick in S&P and Nasdaq by the end of the day, marginally so, but still not fully recuperating the losses for the week last year, especially in light of that tech rout, specifically in the software space and other sectors that are beginning to price in AI disruption. Today, S&P futures leaning towards positive, up 0.2%. The handover from Asia, though most Asian bourses are out for Lunar New Year, also pretty positive today. Nikkei, one of the outperforming indices, up more than 1%. So the handover pretty robust as well, up 0.6% this morning, coming through from these Asian markets. And then Brent, we are actually stabilizing around this level, just shy of $68 a barrel, up about 0.3%. Some more constructive discussions coming out of Iran and the U.S. It seems like the negotiations are going to continue in a couple of weeks' time. As you were speaking about with Stuart, the Iranian side are going to present their plan for negotiating with the U.S. in the next couple of weeks and the contours of a deal. So something to watch out for there. And then 10-year yields, I mentioned this earlier, we have been drifting lower and lower and lower, 4.06 now. We've moved about 15 basis points just in the last week or so. The curve has started to flatten. Not helping is some of the hawkish tone coming out of many of these Fed policymakers, and a few of them are speaking this week as well. So watch out for that. In addition to PCE data and Fed minutes to watch out for too. Switching over, I want to also zoom in on some of the price action in metals as of late. We were just speaking about this with our prior guest, the amount of volatility that we're seeing in metals versus, say, other asset classes, specifically equities. Today, it is green on the screen. So we've got gold just shy of $5,000 here, up 1.1%. Silver up 2.8%. Copper, aluminium. Remember, towards the end of last week, there was a report that came out from the FT suggesting that the Trump administration were thinking of rolling back some of the tariffs on steel and aluminium. But I should tell you, over the course of the last week, gold is down 3%. Silver is down 12% in the last week. Copper down 4%, aluminium down 2%. So yes, the direction of travel over the last 3 months is very positive. But in the last week or so, we have seen some downward pressure being exerted on both precious metals and industrial metals. To discuss more, we're joined by George Cheveley, Natural Resources Portfolio Manager at 91. George, good to have you with us. I was just wondering whether with Lunar New Year, a key source of demand for many of these metals that are listed behind me is actually dissipated, because many of those retail buyers and the buyers coming through from China are actually on holiday now.
Yeah, we've actually seen retail buying has been quite strong, but certainly the holidays do have an effect across all our markets, actually, because China's such a key component, particularly in copper, etc. And we also have this problem this time of year. We don't really get data in January because of New Year, and then February. So we're really in a bit of around actual demand indicators, etc. We're in a bit of a hole at the moment where we don't really get a good idea of how demand's going to be really until March.
So I want to talk to you about some of the supply-demand dynamics that are taking place. And copper, I think, is a very interesting one. This is, I was reading up about some of the pieces that my colleagues put up together. Inventories and stockpiles have actually been growing, and we're looking at the highest level of stockpiles since last March. So you combine the backdrop of higher inventory alongside the fact that your typical marginal buyer is going to be out for the next 10 days or so. And do you see room for perhaps more downward pressure to be exerted on copper at this point? And it's quite simply that the rally has run its course.
It's certainly possible, and clearly there's been a lot of focus on the rise of inventories. The thing with inventories today is you also have to look where they are, and the majority of them today sit in the States. We've had a massive rise in COMEX inventories, where copper is being dragged to the States by the threat of tariffs. We don't have tariffs, but the threat that they might come in has made people move copper to the States just in case they do, and we've had COMEX pricing higher. So whilst inventories overall look higher than they've been for a while, or visible inventories, many are in the States, and I think a lot of copper has been moved there and therefore is more visible, frankly. So counter to that is obviously you've had the States talk about building strategic stockpiles, and China countered that by saying, well, they might do as well, and they do have a strategic reserve bureau whose job is to do that. So there is obviously, on the other hand, speculation that we might have countries building stockpiles of copper, and therefore these inventories can rise, but they're not available to the market.
Okay, that's interesting. So sort of restrictions being put up. To what extent is the move that we're seeing in many of these precious and industrial metals also dictated by macro and the flight away from the USD, rotation under the surface in S&P away from some AI sectors towards materials? How much of that do you think is driving some of the most recent performance?
I think if you look year to date, there's definitely that as part of the reason we've seen this performance year to date. Simply put, we've seen in the equity markets, it's been the large companies who have performed well, and that's normally a signal you've got generalist money looking to rotate. That money tends to go to the big liquid names, first of all, and we've seen in oil, mining, agriculture, we've seen those names doing quite well. So it's definitely, the market saying, I want somewhere that won't be affected by AI or only positively. And clearly, metals, mining, resources generally, you can't AI them away. So we've definitely seen that move. The question, of course, we face now is are we in the early stages of that move, or is that something that's happened? I think when we look at the fundamentals of our markets, they're still pretty positive. We're seeing good growth come through around the world. We obviously will need to see how China performs coming out of New Year. But I think, yeah, this move in some ways we would say, well, we sort of expected it to come because valuations weren't that high. And the market's looking for places which aren't under threat, but also offer good value.
Yeah, so George, it's also been a big week for reports for earnings coming through from some of the big miners, BHP and Antofagasta, some of the names that have come through. How much of their results have driven purely by the run-up in prices that we've seen in copper?
Copper price rises have certainly helped, and we saw good results yesterday from Antofagasta and BHP. They both beat on results and cash flow, etc. We've got all the majors reporting this week. Glencore, Rio, Anglo, Teck are all coming through later this week, and we'd probably expect to see the same. I think if there's a theme, and BHP really highlighted that, is that precious metals byproducts have been a really important driver of earnings. And these, often in copper miners, people ignore them, but they do have, many have significant gold, silver byproducts. BHP highlighted it by actually even selling a silver stream on one of their mines that they have a minority stake in Peru at Antamina to Wheaton for 4.3 billion upfront, plus ongoing payments. So that was done really just to highlight. The question we have is why BHP actually needs that cash. Their net debt is under control with this and other infrastructure they've sold. They appear to be building up cash, and net debt's going to be way below their target range.
Yeah. George, really good to have your perspectives on today. Thank you so much. George Cheveley, Natural Resources Portfolio Manager at 91. Well, some big deals are being announced at the ongoing Indian AI Summit. Anthropic is partnering with Indian technology firm Infosys to develop advanced AI solutions for companies, while Qualcomm plans to invest as much as $150 million to support India's expanding tech startup ecosystem. Joining us from New Delhi is Bloomberg's Swati Gupta. So interesting that now we're getting sort of news announcements coming through from many of these big AI titans, the poster childs for the AI trade in the U.S. What does all of this money coming into India mean for India's AI ambitions?
So, yeah, we are seeing promises of investment coming into India. This is following up on investment announcements for data centers. But what Anthropic has announced in terms of meshing their code with companies, Indian companies like Cognizant and Infosys, and Qualcomm spreading money around Indian startups, it means that these companies are interested in investing in India beyond just infrastructure. They want to invest in companies that could bring AI solutions. And it also speaks a lot to the fact that India, with its population of 1.4 billion people, is ample territory for these companies to train their models and to tap all the data that exists in this country. So companies are coming in droves, and the Indian government is very excited.
Yeah, okay, so that's from the data input perspective. What about upskilling and providing jobs for many of the youth in India as well? Is this seen as an opportunity or as a challenge?
Yeah, so it's being seen as a kind of double-edged sword. Everybody wants to tap this AI boom that is coming in. But at the same time, India has high unemployment and it has talent, but not all of it is skilled enough to work in AI. So companies are trying to hire as many people as they can, but the colleges and the government needs to train people and create the environment and the ecosystem to actually get students upskilled enough that they can get hired for these jobs. At an event on Monday, the chief economic advisor did warn about concerns that they have regarding the slow pace of upskilling amongst India's youth, which is a massive demographic in India. About 30% of India's population is below the age of 18 at this point.
Swati Gupta, thank you so much for the overview of some of the highlights coming through from the AI summits in India and also some of the deals that are being inked there. Now, coming up, income disparity in the top bracket narrows in South Africa. More details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Now, a new study has found that the income gap between black and white households in South Africa is closing. More middle and top income earners are now black. This, according to research by the University of Cape Town's Liberty Institute of Strategic Marketing. But before we get to that, we're going to talk about it with Jennifer Zabazaja. I do want to bring you back to a story breaking news that emerged about an hour ago at the top of our show, per the FT reporting, suggesting that ECB President Christine Lagarde would be stepping down before the end of her term. We now have a comment from the ECB saying that Lagarde is totally focused on her mission. The spokesperson has commented on Lagarde in an emailed statement. So this is coming through now, and obviously a lot of questions about the fate of the ECB president, Christine Lagarde. Now we're getting comments coming through from a spokesperson in reaction to that FT story saying, and this is a quote, Lagarde has not taken any decision on the end of her term. Lagarde is totally focused on her mission. So this has come through from the ECB in the last couple of minutes. Lagarde has not taken any decision on the end of her term. Her term is supposed to end in October 2027. Okay, so if we get more on that story, we will bring you more on it as well. But let's go back to the story that we were just talking about in South Africa and the fact that income gap has been shrinking between black and white households. Our chief Africa correspondent, Jennifer Zabazaja, joins us from Johannesburg. Jen, talk us through the data, and apologies for interrupting there with some breaking news that we had.
No, of course, Jumana, of course, significant to mark that. Listen, this is also very significant news for this economy. We should mention that is just over 30 years out of apartheid, institutionalized racism that really was a focus for this economy. So what this data that you were just referencing there is pointing out is that, yes, potentially there is a bit of a broadening out of some of this economic participation is what the data is suggesting. And to just get a bit more granular, as we can see from this chart there, is what it's saying. The share of white households earning more than what they consider the top tier, 75,000 Rand, or just about $47,000, fell to about 41%. The share of black households now is just at about 41% as well. Just a few years ago, that was about 29% for black households, and for white households, about 61% in 2012. So really, as I was mentioning there, a bit more of a broadening out and potentially a bit of breaking down of some of those barriers that we had seen prevalent throughout apartheid just years ago. But I think we need to take this with a double-edged sword, because as the data did find that there is more economic participation at the top by black households, at the bottom we are seeing more black households as well entering this lower income bracket. And so it's seeming like there is still, although we are seeing more of an upper and middle income class participation from black households, there is still black South Africans, still make up the majority of those at the bottom tier. So clearly still quite a lot needs to be done in terms of at least addressing some of the inequalities and some of the disparities within this economy.
Okay, so this is the data that's come through. How does it compare with the current South Africa employment figures?
Right. And this was a focus when we heard from President Ramaphosa last week, just talking about some of the issues, the lived experience versus what we're seeing in some of the data. We did get some unemployment figures yesterday, which actually potentially might be good news for the president. We saw unemployment figures dropping to their lowest in just over 5 years, actually, lowest in more than 5 years, excuse me, for the fourth quarter of last year, falling about 172,000 to just about 7.84 million in the fourth quarter. Now, of course, unemployment is still a huge issue for South Africa. Just over 30% of the population is unemployed. And so when we talk about the experience of economic participation, this is still an issue that he has been really concerned with, and people still get on this government about, because there still needs to be some of these opportunities that are afforded to a lot of the participation. We are looking ahead, though, to the finance minister, who is going to be talking about potentially what is ahead in some of the potential reforms coming from this government. That budget is supposed to be next week, so we'll wait to hear some of those reforms, but potentially some good news, considering that we are seeing some of the lowest figures for unemployment.
Jen, thank you so much. Jennifer Sabazaj, our chief Africa correspondent in Johannesburg. Now, coming up, Abu Dhabi is making a major push into AI. We'll bring you our Bloomberg Big Take next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Abu Dhabi is making a major push to shape the future of artificial intelligence, and at the center of that effort is MGX, an investment vehicle ramping up deals across the sector, from frontier AI labs to the infrastructure that powers them, as it targets more than $100 billion in assets. That's the story in today's Bloomberg Big Take. And for more, we're now joined by Nandu Nair. Nandu, good to have you with us. Great story on the terminal today. I would suggest that all viewers take a look at it, at the full read, check it out. But quite simply, just explain to us what MGX's strategy is and what their AI ambitions are. What does it fit into their overall strategy?
So I think MGX has communicated widely that it's looking to get a portfolio of $100 billion.
Yeah.
What is new and what, for the first time, what they've said is how they're going to go about building this out. So speaking to colleagues of Bloomberg News, they have said that they're going to invest $10 billion every year for the next few years, and build out this portfolio, right?
Yeah.
Now, for context, this is a pretty significant chunk of cash even for Abu Dhabi. Mubadala last year spent around $30 billion, and it was among the most aggressive investor last year. And this confidence essentially comes from its unique place within the Abu Dhabi ecosystem. MGX was set up, co-created by Mubadala, which is the wealth fund, and G42, which is part of Sheikh Tahnoon's sprawling empire.
Yeah.
It's also different in certain ways. So it actively seeks external capital, which is very different from some of the Abu Dhabi entities. And it's set up almost like a venture or a buyout fund where partners get carried interest and external investors are eager for returns.
Okay, so interesting. I guess my follow-up question was going to be, how does MGX differ from the other investment arms that are available in Abu Dhabi? You say, number one, open to external funding, but also I would say that they are an investment vehicle for artificial intelligence, right?
They've become essentially central to UAE's ambitions for becoming a global player in AI. You've interviewed G42, and they've talked about how they're hoping to get frontline chips into the UAE.
Yeah.
Now, MGX obviously plays a different role in the sense of they are building out this portfolio that's sprawling. In the intro, you mentioned Anthropic and OpenAI. They also have investments in Elon Musk's XAI, which gives them this unique hat trick of investments into some of the most hotly anticipated IPOs globally.
Yeah.
They've also done pretty sweeping deals across infrastructure that is related to the AI space. They've done that $40 billion deal with BlackRock on allied data centers. They've also teamed up with Silver Lake on buying out the Intel chip arm from them. And above all of this, they also have other big bets, right? So they've done the Binance deal, $2 billion investment, and interestingly done through a stablecoin tied to the Trump family.
Yeah.
And then there is the TikTok US joint venture, MGX is among the 3 funds that have a 15% stake in this new entity. Again, extremely critical to the Trump administration, extremely high-profile deal globally.
Yeah, and really speaks to their growing clout as well. Nando, thank you so much. And a reminder, you can read this story. It's up on the terminal today, a big take on MGX. That was Nando Naeckter. So just type NI Big Take, go. All right, I just want to recap the flood of headlines that have been coming through around the ECB, because it is quite important that we mark this. At the beginning of the show, the Financial Times put out a story suggesting that Christine Lagarde was readying herself to leave the ECB before the end of her 8-year term, which ends on October 2027. A few minutes ago, we had a comment come through from an ECB spokesperson emailing, this is an emailed statement saying Lagarde has not taken any decision on the end of her term and that she is totally focused on her mission. So there you go. It's sort of a rebuttal to the FT story that came and dropped at the beginning of our show. So we'll definitely keep you up to date on all the developments in that space, especially with the potential personnel changes at the top of one of the most important central banks in the world. But that is it for Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.